I think over the last few years, there's been too much of liquidity that's been generated out of the major economies in the US and Europe and also in Japan. But there are not adequate capital controls, and this capital has flown into markets like Asia. Even as the medicine that is being given to those economies is to create liquidity for those economies. But since that capital cannot be controlled, it's resulting in bubbles in other parts of the world. So obviously, that medicine is not working very well as far as Europe is concerned. It has worked to an extent in the US, as we see that the economic data in the US has been improving. But I think the fragility of the European economy is there for all to see. I think things are going to once again turn towards the negative side as far as Europe is concerned. I think the key is that when the markets are driven by greed and fear, investments are driven by greed and fear. So when greed is in the markets, as we've seen from '09 to now, the point I'm making is when things are calm, that's the time to invest into developing depth in the economy, so that when the times become tough, as we might see in a couple of years, interest rate risk is the biggest risk in the global markets today. And if that risk becomes an actuality, to prevent damage from those kind of risks, countries like Sri Lanka would need to make sure that they have invested in their economic strengthening during the good days.